It's hard to argue against the fact that Bitcoin is in a bear market. But the reason it started breaking down isn't as simple as one headline. The tariff comments caused a sell-off. Traditional markets reacted, crypto reacted, but those markets recovered. Crypto did not. And there's some data that might show exactly why.
This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research.
Hey guys, I'm Alessandro. Welcome back to the show. Just check out this sheet. Since the low in 2022, the US has consistently bought Bitcoin. In fact, even after the government shut down on October the 1st, they kept buying Bitcoin. But after October the 10th, they became structural sellers. As soon as US markets opened, almost on cue, the market would drop. This kind of selling tells a story. It's from an entity or group of entities that can only operate during US hours. And that narrows it down somewhat to who it can be. The market sold off on October 10th because of the tariff comments. There isn't a mystery there. Trump announced tariff 2.0 to China, big major sell-off. Traditional markets dropped, crypto dropped, everything moved together as it normally does on large announcements. But stocks bounced while Bitcoin didn't. Crypto just kept selling. And that tells you this isn't global panic, it's US-based flows reacting to something specific. And the real issue that happened on October 10th wasn't just a tariff thing. Just minutes before the aggressive liquidation cascade, the MSCI dropped a proposal that directly affects any digital asset treasury company, MicroStrategy included, that says you cannot be included in indices if you have more than 50% of your treasury held in digital assets. Now, to fully understand this, it's important to understand who the MSCI are and what they actually do. Basically, they decide what kind of company something is and whether or not that kind of company should go into a global index. The big global indices that track pension funds, index funds, etc., if they change that classification, all those funds rebalance. Not because the MSCI forces them to, but because that's how index funds work. And if this goes through, there's a hearing in January, companies like MicroStrategy will get removed from major indices. And once that happens, every index fund holding MicroStrategy will have to sell it. They'll have to just do it mechanically. And that's the behavior that changed on October 10th. The tariff headline hit everything. The MSCI proposal hit crypto-specific flows. And it hit Bitcoin the most. And MicroStrategy has an enormous amount of passive holders now. Somewhere around 15 to 20% of all of its market cap is held in passive index funds. And so the tariff headline hit everything, but the MSCI proposal was specific to crypto. It hit crypto flows and it hit the biggest accumulator of Bitcoin directly. From that moment on, MicroStrategy started falling faster than Bitcoin. Bitcoin failed every bounce, and selling during US hours just hasn't stopped. When the heavy selling only shows up during the US session, it's not retail and it's not global traders. It's coming from entities tied to the US equity ecosystem, the part of the market that actually cares about the MSCI proposals. The Coinbase premium flipped negative as well. This means that US spot traders were discounting Bitcoin relative to the rest of the world. And this structural selling explains why crypto didn't recover after October 10. But the aggressive selling that's happened in the NASDAQ and the SPX this week have just compounded things. Bitcoin tends to move in lockstep with the NASDAQ when the NASDAQ has large moves. And especially if those moves are to the downside, Bitcoin is heavily correlated. Biggest risk to your crypto isn't just your wallet. Your connection is also massively important. Browsing without a VPN leaves what you do exposed to anybody watching the network, especially on public or weak home Wi-Fi. NordVPN encrypts your connection so traffic stays private and your data cannot be read even if it's intercepted. At around 9 cents a day, it's about the cheapest layer of protection you can add. You can get 74% off a 2-year plan plus 4 extra months free, backed by a 30-day money-back guarantee. You can go to nordvpn.com/Alessandro to claim this. That's nordvpn.com/Alessandro. Thank you to NordVPN for sponsoring this part of the video. And this is where we can start to think about one thing that's been pressuring markets all year. The Fed funds rate has been above the 2-year yield all cycle. And the simplest way to think about this is the 2-year yield is the cost to the government to borrow money for 2 years. And obviously the market decides this. The Fed funds rate tries to influence interest rates, but really it's the market that decides. And often when the federal funds rate, so the interest rate set by the Fed, is above the 2-year yield, it tightens financial conditions. It pressures small businesses, large businesses. They struggle because essentially the cost of capital, the cost of borrowing, is too high for economic expansion. And the first to feel this are Main Street. So Main Street can suffer whilst Wall Street can flourish. And we've seen that. We have what's known as a K-shaped economy, where a portion of the economy gets poorer and a portion of the economy gets richer. The vast majority get poorer because they're in the downside of the K, and a small portion of the richest continue to get richer. We've seen this in the stock market. The stock market's breadth has been awful, so the gains have been very concentrated in amongst the winners. Right now, for every dollar that buys the SPX, the top 500 companies in the US, for every dollar that buys that index fund, 40 cents, give or take, goes to just 10 companies. And we've seen the reverse repo facility basically drain. It's called the RRP, and when this goes down, you tend to see Bitcoin go up, as we've seen in this chart. They have completely inverse relationships. This account is completely drained. There's almost nothing left in it. So the Fed haven't been able to push any liquidity into the markets for quite a while. And of course, this week as well, we had NVIDIA save the AI bubble, and then more data came out to say that actually there's no chance that this AI bubble can be sustained. This AI bubble narrative doesn't look like it's going anywhere either. Another thing that's just pressuring markets to the downside. But one thing that's been unusual about this cycle is there's been no euphoria. There's been no blow off top. There's been basically no real engagement from retail at large. And that probably means that we're not going to have anywhere near as depressing a drawdown as we had before. What you need is aggressive blow off tops to get horrendous sell-offs to the bottom. If the way up is slightly subdued, the way down should arguably be subdued as well. And when you layer on the fact that alts have basically been in a bear market since January, a few select outperformers, yes, but the vast majority, even the best tokens, the ones that have the most use, the highest use case, have still been crushed in the last 10 months. And I think all this leads to like one simple point. Bitcoin will stay roughly pressured to the downside until financial conditions flip. We're not going to see financial conditions really change properly until the Fed funds rate comes down underneath the 2-year yield. And the reason that's so important is because what you can see is that the economy can begin to expand if that happens. Just look at this chart here. This chart's the Purchasers Manufacturing Index. This is an interesting index because it just tells you if the economy is getting bigger or smaller on a monthly basis. A reading above 50 means the economy is growing. A reading below 50 means the economy is contracting. It's a very interesting piece of information where companies who are going out and buying stuff, who are really sort of driving the economy, can say, yes, we bought more stuff than last month, we're injecting more into growth, or no, we're buying less than last month, we don't think there's any growth coming. This particular chart, you can see as soon as the PMI peaks, it tends to mark the exact tops for Bitcoin. But this cycle, there's a massive discrepancy. What does this tell you? It tells you one very, very simple thing. It says the economy for most industries has not been expanding. The reason it hasn't been expanding is because interest rates have been too high for those businesses. Now, yes, as we've seen, portions of the economy have done very, very well. This is data from Deutsche Bank, who think that the US would have been in a recession if it wasn't for capital expenditure in AI. The AI capex has basically pushed the entire US economy forward, brought GDP out of recessionary levels to growth levels. And so on the surface, things seem fine, but underneath, we can see that Main Street has been struggling. And Main Street are retail. They're the people who push euphoria into markets. They're the people who are driving YouTube views, not the institutions. And so now this MISC news has dropped. We might have one of those institutions that has been driving so much Bitcoin buying power have their legs completely removed from under them, and they have no more ability to buy. This is why the markets have been coming down so aggressively since October 10. And this is why I think we need to see that change in financial conditions before we can really see any kind of reversal. And right now the 2-year yield is sitting around about 75 basis points underneath the Fed funds rate, which means we still need 3 rate cuts to get down to that level. Rate cuts are slow things. We've seen how volatile the decision in December is going to be. It was a coin flip just yesterday, then it swung 75% no change, and now it's swung again to 75% of a change, 25% no change. And it just tells you how uncertain the market is right now. The market is pricing in more cuts into 2026, and those 3 cuts look quite likely to happen roughly by June 2026, give or take a few months. I wouldn't be surprised if we see a more subdued, shorter bear market, call it whatever you want, and the market kind of front run those easing financial conditions. We know Trump is very, very likely going to replace Powell with somebody who is much more dovish. That means much more likely to bring rates down. There is a theory that this MISC thing is a ploy against Trump. They know how much Trump loves crypto. And the thing about markets is markets are forward-looking vehicles. They price in the probability of things that they see ahead of them happening. That's why technical analysis works, because the people who are making those bets on the market have information and they express them with their money and those show up in the charts. I think Bitcoin's pressure to the downside. I think we probably get some kind of relief rally at some point, but I don't really think this relief rally takes us to new highs or even necessarily breaks above, kind of 108. I think 108 is a pretty key level. I don't think we get that high. I think we do see at least a few more months of pain. We were at all-time highs just 40 days ago. I don't think this is a quick reversal situation. If we do live in a simulation, then the bottom doesn't come until October 2026. As I said, I think financial conditions are going to remain tight until the federal funds rate is underneath this widely considered number. It takes a long time, months, before these actual conditions can show up. People have to take out loans at those levels. Then they have to use that money and invest it into their business. Then they have to use that money, their inventory in the business. People have to buy it. These things take at least months to show up. Again, markets are forward looking, so maybe they'll see it earlier. Let me know what you think. If you have 5 minutes, please go and check out my latest show I did, the podcast I did with Matt Hogan. Matt is an incredible guy, Bitcoin OG, well, ETF OG, and he has got incredible knowledge. This is actually an amazing time to go and check something like that out, because it can help you build perspective on time horizons. Just zooming out and going, okay, where do I think Bitcoin's going to be in 6 years, 5 years, makes life a lot easier. Where do I think crypto is going to be in 5 years? Can make life a lot easier. So go check that out, please. Otherwise, I hope you have an excellent day. I shall see you in the next one.